Welcome back, everybody. In today's lesson, we're going to be covering trading mistakes. So let's just jump right into it, all right? So the first one is trading emotionally. Of course, this is the number one reason 70% of traders fail and abandon the equity in their broker accounts. This comes from giving up after consistent losses and developing a fuck it attitude where they just basically quit or give up. Again, that's why I outline this word here. They just abandon the money that they have. Um, a lot of it might be happening because of finger crossed and looking up to the sky, hoping and praying. Um, but honestly, you can't really avoid trading emotionally. People have to learn to be above it. And so it's a huge part of the trading development, one of the biggest ones. We'll be outlining it throughout this whole video. So the key takeaways on this is um, basically it's based on emotion. So it's greed or fear is mainly like you get greedy or you're fearful. These are basically the two main reasons people are buying or selling, and specifically buying at market tops and selling at market bottoms. Uh, Basically, getting very poor performance, not sure where their decision making is, not sure who, or what to trust. Especially on the lower time frames, people get very confused. So it's very understandable why they are trading with either a fear or a greed. Um, Underestimating risks associated with investments is one reason why investors sometimes make substantial decisions based on emotion. Or, my bad, suboptimal. So, again, we're going to cover that. Yes, you're going to see as I outline throughout this, there is many times you might think that you're very right and sticking to something, and uh, you're not trading with a real system, and these are suboptimal decisions. Not having a plan, not having a checklist, it's suboptimal. You are trading with the financial elite. You have to be and replicate the systems and the things and the strategies that they use if you want to be a part of the decisions that they make when they move price. So, during periods of market volatility and rising interest rates, investors often move funds from riskier stocks to lower risk interest rate securities. So, this is a huge thing. This is like $1 million insight. Kind of like watching where the government is moving hundreds of billions. And like we know in 2022, like the Fed ran up to like a $9 trillion asset, allocation, and it was just insane. So yeah, watching this is a huge thing, especially when you're trying to track the dollar versus foreign currencies. This is very important here. You should definitely look more into this, right? Interest rates, right, and even bonds. You'll see how they affect each other, the correlation that they have, and then the correlations that they create with actual currencies. Dollar cost averaging, bad. Diversification are two approaches that investors. Okay, again, investors, not good for traders, guys. Important, not good for traders. Uh, can implement to make constant decisions that are not driven by emotion. Um, so these are constant. They say they're not driven by emotion. This is because dollar cost averaging and diversification are are really good things. They're in fact a must when it comes to investing. Again, as a mistake though when it comes to trading in the markets. So staying the course through short-term volatility is often the key to longer-term success as an investor. Again, that's investing, guys. We can't not be confused by this. This is good for people who are looking to benefit from their money from years to I'm talking even decades. So this is something that if you can approach the market this way, and I do recommend you invest in stocks, but this is for investors, and what we're going to be covering here is trading. So as you can see here, right off the bat, right, averaging down. So again, I put right here specifically scalpers, day traders. Look, this is not a good thing because again, you're going to end up trading emotionally. You're thinking you're going to be right, right? If your setup fails, though, you have to run. You cannot continue. It is only going to hurt you in the long run. Okay, so when if you're losing, dip out. Okay, if the setup is wrong, quickly run. If you don't have stop losses, you're probably already wrong. If you don't trust the setup to have a stop loss, why are you even trading that setup? All right, you are less likely to catch the price movement in the daily direction if you're not trading with a proven system. So again, averaging down, very bad for traders, specifically scalpers and day traders. So trading without risk control, again, it's emotional. You're over leveraging. You have different risk each trade you take. Maybe you start with 1%, and all of a sudden you're going for 3%, and then it's 5%. And then let's say you hit that 5%, you make a lot of money. Then all of a sudden you're going 10%. That manages to go your way. Then you go 50%. Then you're on fire. You're a god. And then you go 80%. You're a freaking genius. You're on your way to millions, right? And then all of a sudden, you keep going on that streak, and then you keep risking, and before you know it, you're risking 100% of your account, and you're wrong once, and boom, all of your equity is gone. So, or we can even view this in a more conservatively way, where you're risking 1%, and then you're risking 2%, and then you're risking 1%, and then you're risking 3%, and then you're risking 1%, and then it's 5%, and then it's 3%, and then it's 6%, and then it's 3%, and then you see you kind of just climbed up the ladder real slowly. You lost a little too much equity perhaps, and then now you're just dropping your risks down completely to where, this is where, in reality, this is where you should have started, was way low and at the max go to 2%. But I don't even go there myself personally. 2% risk is, especially if you're trading a $100,000 account, that's not optimal. You're not trying to risk $2,000 to make 8% in one trade. It's not worth it. If you risk $500 and you make 2%, that's worth it. That's a 1 to 3 setup. But if you risk 0.5% and you hold to full volume all the way to TP, all the way to your take profit, you can easily net a 6% trade. And so you would be risking $500 to make 6,000. That is optimal. That is smart. That is risk management. So these emotional decisions that we're going to be running into when we're learning, you're going to have to really fight yourself and learn to have a better discipline over yourself and your emotions. Because yeah, sure, you deposited $500 you're willing to lose. Yeah, sure, that money meant something to you. You worked hard for it. Sure, you wouldn't just throw it away, right? Completely wrong. Trading has the power to manipulate your emotions and your decision making, and you will make bad ones, bad calls, and most 70% of traders commonly are losing their money because of this emotional decisions. So this is the thing, man. It's counter trend trading most of the time. Most of the time, a lot of people will catch a direction one way and do really well. And then the moment that market reverses, they keep looking for the same selling setups, thinking it's an overall pullback, when in reality the market has reversed and they should be trading with that new trend established. So the golden rule of trading is trading with the trend. That's the golden rule. You don't ever want to be against the financial institutions. You want to make money with them. So this all kind of leads down to one simple thing. You're not following a trading model. You don't have a system. You don't have a proven, and I mean proven, tested edge that's going to consistently print results. So, you need a risk management strategy. You need to control what it is you're risking. You need to have people have scaling strategies where they scale their risks. As they win, they risk a little bit more each time. And a lot of people have huge success with that. There's technical analysis strategies. So what we're going to be looking at, on the technical side. And then there's checklists and procedures. So these are very important because these are going to help you fundamentally, like checking high impact news before trading. This is huge. A lot of people will blindly enter the market and see wild movements and not know what's happening or why it's happening. That is another reason why people will start becoming emotional, because maybe they lost more than they intended, and then before you know it, they get to the point where they have given up from consistent losses and begin having a fuck it attitude. So we have to avoid that happening to ourselves at all costs. We have to keep an investor's mentality. Even though we're traders, we're willing to take more risks than investors, but we have to keep an investor's mentality that our equity preservation is what is most important. And even the equity that we build with that capital becoming more and your balance increasing, you also have to protect those profits that you create as well. So I'm going to wrap it up there. I'm pretty sure. I mean, I kind of showed you guys a little bit. I wanted to have a little bit other resources here, right? Losing money, unfortunately, is an inherent part of trading. That's why I'm trying to cover this risk management so much. Risk management in trading begins with developing a trading strategy that accounts for the win-loss percentages and the averages of the win and losses percentages. You got to see what your model is producing too. So you have to forward test it and prove that this is a system that has an edge over the market. Um, and then, it's like, a lot of people don't know like what risk management is. They don't really know what that means. This is a really good resource right here. Um, this university right here. This gives you a very solid overview of what risk management is, and I encourage you guys to go ahead and, again, pursue core market knowledge. Get really into the depths of understanding what these terms are, what they mean, and how to. It's like a commandment to live by. Not just in trading, but in your life. Being conservative, making sure you're managing your risks. You know, and that's how you're going to protect yourself financially, not just in life but in trading as well. So you guys can review this, and it gives you a pretty deep insight about risk management. But as far as trading, it's not just trading specific. That's why I did not cover it. Well, if you enjoyed the video, which I know many of you did, please go ahead and give me a thumbs up. If you guys are new and this is the first time you guys have heard me speak or show you guys something, I'd appreciate it if you guys gave me a little bit of criticism in the comments. If you found value in the video, please subscribe, come back for more, hit the notification bell. I've got so much more for everybody. Again, I want to reverse the fact that many successful traders, what they do is they become successful and sell their knowledge. I'm here to give it to you all for free. So, till next time, like I always say, peace, love, and harmony. Thank you.